Welcome to Common Sense Investing. My name is Cameron and happy Monday. Happy Monday evening. It's always nice to get the week started. Mondays are better when you're a stock market investor, right? If that makes any sense. I know a lot of people hate Mondays. I actually kind of look forward to Mondays. I look forward to seeing what stocks will do in a new week. Go up, go down, another bull market, another bear market, the anticipation, all the research you put in the week before, is it going to work out or is some catastrophe going to happen and stocks are going to go down? It's always fascinating for me. So hopefully, even if you don't like Mondays, investing can make it a little bit better. Today's Monday live stream video, I'm going to talk to you about Atrium Research, finding the next takeout in Canadian small caps part 2. I'm going to tell you what this research paper means to me, kind of how to read it and what we can take away from it. So that's kind of the point of this video. As usual, I have a presentation. I've got about 20 slides to go through. After I get through my presentation, feel free to chat, ask questions, no problem. And then afterwards, I will stick around and answer questions or talk about stocks if you want me to, right? So yeah, I'm really excited about this paper. Their first part 1 was quite good. I made a video on that previously. Do not forget, I am not your financial advisor. I am not a financial advisor, and I do not give buy, sell, or hold alerts on this channel. I do not give financial advice whatsoever. I actually don't even consider myself a stock picking channel. I like introducing good companies, what I think are good companies, to hopefully some good people, some good investors. I just provide an introduction and I let you do your own research to decide whether or not that stock, that company is a good fit for you and your portfolio. What I deliver is just my opinion, and that's it. I'm just one average retail investor, right? And I try to deliver some good quality though on this channel, and I'm trying to keep up with getting about 3 new videos out there a week if possible, sometimes a little more, sometimes a little less, depending on whether earnings is coming out or not. This past week, well, this one's a bit old. I think this is 8 or 9, 10 days old. This is my interview with the CEO of Gatekeeper Systems, Mr. Doug Diamond, but I've got some interesting videos this week. I love this thumbnail. It's one of my favorites that I've ever made. Dumpster diving for SPAC stocks, special purpose acquisition stocks. In this video, I find a company called Sabio Holdings, and even though it's a SPAC stock and even though it's down substantially, I have quite a bit of interest in them. I recently made a video on NTG Clarity Networks, and then I covered their earnings, and then I had some questions. So then I went back and I have this interview with the Vice President of Strategy and Planning for NTG Clarity Networks, Adam Zaglul. So that was a fun interview. If you're researching NTG Clarity Networks at all, that's a must-watch video. As well as Well Health Technologies. I know a lot of people complain, oh, it's an hour and a half long. I cover their entire conference call. Keep in mind the conference call is an hour long, so it's only about an additional 30 minutes at the end of me kind of answering questions. But yeah, Well Health Technologies had an hour-long conference call, and I like, putting that on YouTube. I hate going to a company's website and just listening to it. It's boring. It's got a terrible video or audio player on the websites, and it's not very interactive. If you ever go to my earnings calls, please go in the live chat, because even though I don't talk during the earnings calls, I'm hanging out in the live chat, tons of comments, questions, and everything else going on there. And one of my recent videos that I've been talking about more and more recently, why I'm kind of looking at some of these stocks like Legend Power Systems, Sabio Holdings, even to some extent NTG Clarity Networks, why I'm looking for some of these maybe a little bit higher risk stocks, a little bit less proven, maybe a little bit more reward because they're back in that 10, 20, 30 cent range instead of like, ADF Group is now sitting at $15. But one of the reasons that I'm looking at some of these higher risk penny stocks recently is the easy wins are over. I think some people are getting lazy out there, right? All of the good, profitable microcap stocks that I've been covering for years, all of the stocks that transitioned into making earnings, proved themselves to be good companies, the companies that you could really look at and say, this is an undervalued company, but it's a really good company. I'm really going to have faith in this company and just continue coverage, and I think it's going to work out. And then recently in the past year, share price is up 100%, 200%, 600% in the case of ADF ADF group, I find like a lot of those easy wins are kind of gone. They're harder to come by. People are getting lazy. So that's why I know you're probably going to get tired of me, but I'm going after some of these kind of higher risk plays and putting a few new companies on my channel. This has been my top 10 list recently, right? And you could see some newer ones here like Payfare. I really like Payfare. A lot of people are scared off by the gig economy. Payfare provides financial services for the gig economy. It's new, it's different, there's some risk. If regulation comes through that damages the gig economy or something that damages Uber, Payfare is in trouble. But if you can get past some of these risks, keeping in mind that we are microcap investors, we are typically high risk type investors, then, a company like Payfare looks really attractive, right? But some of these easier wins like Enterprise Group, ADF Group, these profitable growing companies, those are gone. Even recently, BQE Water, which I started coverage on at $32, $33, somewhere in that range, is now, I think, at about $65 today. So interesting. Great success. I hope everybody's making money. But yeah, we got to go after some different companies. We need some new ideas. And that's kind of part of why I'm looking at Atrium Research's paper today. This is my returns. So it's interesting because I've been tracking it. Well, I track it every year. This is the first time that I've even come close to publishing it, except for on my YouTube channel receipts. So my top 5 Canadian stocks video where I picked 5 stocks for 2024 is up 35%. So you can tell we're in a bull run, right? That's a nice return. The year's only, a third done at this point. Interestingly enough for me, my number 1, 3, and 4 picks are up substantially, 50 to 60% returns. My number 2 pick, Well Health Technologies, is I think down today, so that 3% is gone. It's probably negative. And Game On Entertainment. It's interesting in that always my number 5 pick every year seems to hold me back a little bit. I usually put in my number 5 spot kind of a more high risk, true penny stock. As you can see, $3.63, 44 cents, 77 cents. Game On Entertainment was 10 cents. It went all the way up to 20 cents. Now it's come back to 10 cents. So if people were trading it, they made money. But like I was going to say here, it's interesting for me because my top 5 picks are 35%. The average returns for companies that I've been bullish on my channel are up over 60%. So that's some pretty decent returns this year. We've definitely had a nice year with a lot of easy wins in microcap stocks, right? And that takes me here. That takes me into probably the hardest part for microcaps. That's probably why you even watch this channel or some other, channels, Substacks, YouTube videos, research papers, whatever you can get your hands on, is we're all out there scrambling. Microcap investors are all out there scrambling to find the next great return, the next 10x to 100x stock, right? And this kind of takes me into here because I've always gotten some good ideas out of Atrium Research. I think this is probably the first year where I think Atrium Research is getting some good ideas off of me. And we'll go look at that in a bit, right? But keep in mind the purpose of this paper when you look at it, finding the next takeout in Canadian small cap stocks, part 2. So this is their second edition. I'll link to both editions, part 1 and part 2, after this video down below in the pinned comment if you give me a couple minutes. Now, one thing to keep in mind, this is not talking about the next 10x stock or 100x stock or anything else that most of us are looking for. This is looking at the next takeout in Canadian small caps. They're looking at the history of stocks who have been bought out recently and what we can learn, or what they have learned anyway, from looking at those stocks, right? So some interesting takeaways from that. Since their part 1 of this research paper in November, there's been 9 more acquisitions. So lots more data for them to look at. A lot more companies that have been bought out like they predicted. One of the reasons they've been doing this research paper is essentially this that we've all been talking about for the last couple of years, especially since COVID, when stocks really went down and tanked and there was a lot of cheap microcaps out there, is they will reiterate that this points to the major disconnect between the fundamentals of good companies, probably, hopefully, and their valuation. So Atrium Research tries to go through their criteria, finding companies that would be attractive for other companies to purchase because they're a good company with a good product or good service and they're cheap. So that creates a little bit of difference between what Atrium Research does and what some other people do for research, which I find interesting. It helps supplement my research. One of the things to note here, right, they're actually looking for poor stock performance. If you're a CanSlim investor, if you're a modified CanSlim investor, you're typically looking for investing in strength. You wait until a stock starts going up, and that's kind of when you buy if you're using a modified CanSlim method, right? You know, a lot of people look for buying cheap, but it may never get cheap. It may never rebound. You might get this up or down that you're always dealing with in microcaps, and you always seem to be buying these dips and never selling at the right time, right? So that's not what they're looking for. They're actually looking for poor stock performance, stocks that are down from their all-time highs and, you know, hopefully have nowhere to go but up or get bought out. Now, they also look for cheap, which is important, right? If it's overvalued, if it's, you know, a stock that everybody's excited about and we look at the value and obviously it'll take years and years and years to grow into its valuation. To us as investors, it looks not cheap. It looks expensive. We probably wouldn't pay that valuation. And normally what will happen is the company looking to buy that company will also look at that valuation and just go, Profitable, of course, we're all looking for those profitable microcaps. In 2024, I've started more and more research looking at microcaps that are unprofitable again, but will be transitioning to profitability soon. When I started coverage on all these stocks that you'll see me cover here that are now profitable growing microcaps, when I started coverage on them, they were all unprofitable. They were just about there, but they weren't quite there, right? That's one of the advantages of being a small retail investor is we can get in at a time when a company is at an inflection point before the larger investors, before institutions, all of that. So I'm starting to research some stocks that are not quite profitable yet, but will be soon. Of note, that's kind of what they're looking for too, is 6 of the 9 firms were profitable. So not all of them, right? 6 of the 9 firms were profitable that were acquired. Of course, they're looking for solid growth and tailwinds. I will be having a video coming up soon that is called Revenue Growth is Not Overrated. I'm getting sick and tired of people saying that revenue growth is overrated. I'm going to make a video telling you why it isn't. And that's, of course, what Atrium Research is looking for as well. Solid growth and hopefully some tailwinds. Market cap over $100 million. Now, this is probably the most interesting thing for me of this new paper. 3 of the 9 firms were acquired for an equity value of over 100 million compared to 6 out of 7 in the last cohort. So it's changing. What is happening is that more companies acquiring Canadian microcaps are willing to buy smaller companies. So previously, 6 out of the 7 stocks that were acquired had a market cap of over $100 million. This time, only 3 of 9 of the firms that were acquired had market caps over $100 million. So even live and learn for Atrium Research, we will change this criteria to a market cap of over $30 million moving forward. So, I mean, some things to consider here. These are guidelines, not rules, at least in my opinion, and maybe Atrium Research would disagree with me, right? But you can't always go with this, like even profitable. 6 of the 9 firms were profitable. Okay, market cap over 100 million. That was 3 of 9, 6 of 7. It's not perfect. Investing is never perfect or pretty in microcaps, right? We try to tend to put ourselves in a position to succeed. Nothing ever seems to be 100%. So a lot of these are kind of guidelines and not rules. The market cap requirements are changing for Atrium Research from 100 million all the way down to 30 million moving forward. That should be fun, right? And the other thing that's fun is, of course, point number 6 for Atrium Research. That's fun for me because that you know, there's a lot of things that we could talk about in here. Private equity friendly. What does that mean? 7 of the 9 companies that were acquired by private equity firms, aligning with the data from our last report. So this is consistent that private equity are buying a lot of these Canadian microcaps. Again, we should look for characteristics in small caps that would fit into private equity portfolios, such as predictable revenue, simple business model, clean balance sheet, profitability, etc. Right? So that can include a lot that basically says to me, decent looking company, right? Solid company, good revenue, predictable revenue, not super volatile, not wondering, if next year going to be up or down. They're looking for good growth, good company, clean balance sheet, simple company to evaluate. It's funny that private equity firms with all their resources are pretty much looking for the bloody well same thing that we are as microcap investors. Recent acquisitions on their list here. Now, a couple things that I wanted to point out. Well, number one, when I look at this list, not a lot of stocks that I cover. H2O Innovations, of course, was my number one stock pick for 2023. It did extremely well thanks to their buyout. 68% premium on top of the price that it was at when it was bought out, and a 33% premium on top of the all-time highs for H2O Innovations. But the other thing is that none of these other companies are on my channel. And I was actually getting a little jealous there. Like, why are all these acquisitions? Why am I not covering these stocks? How did I miss them, right? So a couple things to point out here is that people always talk about, oh, I hope my stock gets bought out. I'm going to make a fortune. The average premium paid for all these acquisitions were 69%. So that's very, very good. Don't get me wrong, 69% on top of the current day traded price makes you a lot of money. But I know a lot of people talk about, okay, I'm going to make 200%, 300%. A $1 stock is going to get bought out for $3. Not usually. Right? The average is 69%. Yes, there's Farmer's Edge here that got bought out for 218%, 151% for HS GovTech Solutions. But I mean, even this HS GovTech Solutions, whoever was covering that one, down 65%. So it got bought out, but it was down 65% from all-time highs. So a lot of people, 65% of the people probably didn't even make money when they got bought out. Right? The other one here, where's this other one? 218% premium paid. It was down 98% from all-time highs. So really these seem to be outliers, and the average premium of most of these stocks, I should have calculated it out, taking out the lowest and the highest, is probably lower than 69%. So, what are we looking at? Maybe 50%, 60% if you're getting a buyout. It's not necessarily the best. So that can't be ignored, that with all of these stocks. And again, a lot of this is thanks to COVID. But you notice that a lot of these buyout stocks, this is why they're not on my channel. I'm glad they're not on my channel. Down from all-time highs, 65%, 52%, 19%, 17%, 98%, 50%, 98%. A lot of these stocks I probably wouldn't even look at on this channel. So it's not a terrible thing that, some of these companies that are down so much are getting bought out, and then I'm simply not covering them. So I'm happy about that. And the two outliers here, right? The only ones that actually made investors, shareholders money, H2O Innovations, again, which was, of the two stocks that actually made people money, I had one of them, H2O Innovations. The only other one was Ibex Technologies, which was bought out at a 29% premium and 28% above all-time highs. So out of all these stocks, only two truly made people who bought at the top make money. But it's interesting, and not saying that from the Atrium Research list that these were the best companies. These were the ones that got bought out, not necessarily the best, because Atrium Research actually tracks their performance here, potential takeouts portfolio, and they've done quite well. Where the TSX is up, 14%, their portfolio is up 22% in the same time. So that's part of the reason why I follow Atrium Research, is they do provide some good stock ideas, as well as their criteria that they're looking for things. Here, other than, maybe going for this poor stock performance, but it is looking for a lot of the same things that we are looking for. Profitable, solid growth, decent market cap, private equity friendly, which means a good balance sheet. Basically, they're looking for everything that I am looking for. And they're up 22%. Now, the thing is that it's interesting for me because kudos to them. And, sometimes the challenge for me, as I pointed out, my top 5 2024 Canadian microcap stocks is only up 35%. One of the reasons it's only up 35%, while my other list, which is all the stocks that I cover on my channel, is up 65 or 64% or whatever it is I don't change it. Right? This video was made December 19th, 2023. I stick with those stocks. I don't dollar cost average down. I don't dollar cost average up. I don't trade in. I don't trade out, right? So that's the limitations. I want to show people that you can invest in some decent microcaps, do your research, and you don't have to worry about bloody well day trading them every day, right? You could hold on to some of these stocks for a year and still make some pretty decent returns. Now, you can make a little bit better returns if you manage your portfolio a little bit, and I would suggest the same with Atrium Research. Is, they have their list, they're stuck with it until they publish a new list. Same thing, you take their 22% returns. I think if, reasonably, it would be reasonable to say that your average microcap investor, there's, I think, 29 stocks on this list. Even if you had a stop loss set for 25%, which is a massive down percentage, I don't recommend going that far down before you have a stop loss kick in. But even if you set it at 25% and you got rid of these bottom 3 stocks, Total Telecom down 43%, Deveron down 50%, and Spectra 7 down 80%, I would suggest that the Atrium Research performance would be a lot better than 22%, right? So interesting for me, but the most interesting part for me is getting investing ideas, right? If I could find other people doing research and finding companies that are similar to what I am looking for, that really helps me. It really does. I mean, one of the limiting things for microcaps and researching microcaps, investing just in general, being a microcap investor, is finding the time to do the research. Because again, we can't go to Seeking Alpha, or we can't pay the Motley Fool, God willing, and have some site just give us stock picks. That's typically not what we do as microcap investors. We do the work ourselves. We learn how to do it over time. We build experience, right? And learn how to be an accountant over the decades. And we find our own stocks to invest in. So if we can get a list here of new stocks, new ideas, that's always easy. Now, one of the things that I'll note is this is their watch list deletions over here on the right side of this list. Again, this is a list of companies I haven't really covered. I actually talked about Reitmans a couple times. I never made a video on them. Clothing store, I think. Total Telecom. These are not stocks that are on my channel, and they are watch list deletions. So they are being removed from the Atrium Research acquisition list here. What is being added to their list is a long selection of stocks that I do cover. OneSoft Solutions, Symmetrix, Thermal Energy International, Beware Holdings, Grey Wolf Animal Health, California Nanotechnologies, Reclaim, and NTG Clarity Networks. Of the 17 stocks being added to the Atrium Research list, I have covered significantly 8 out of 10 of them. Now, in all fairness, in my Patreon, I did cover Quorum Information Technologies. This is a company that's being invested in by the son of Constellation Software. I forget his name at this point. And some of the stocks that I don't cover here, like I believe Zedcor and BioRem, are heavily covered by Small Cap Discoveries, as well as, of course, Small Cap Discoveries covers a lot of these stocks as well, right? There's a lot of overlap here, even though I try to find a lot of my own stocks. Obviously, in the Canadian microcap space, there's some overlap, but I found it interesting. I got a kick out of 8 out of 17 of these companies I provide coverage on. So if you're looking at this list, obviously, I hope you follow my channel because you're going to get a lot more information for a lot of these companies. And this is fantastic for me. Like, this is the point of what we're doing. And if you go watch, maybe in the bottom of this video too, I'll link to one of my favorite videos of all time was done by Ian Castles recently, and it was how he researches and how he finds microcap stocks. And one of the things that he describes that I 100% agree with is that he talks about how not only do we try to get into these stocks before institutions. That's always what I hear. You know, the superpower of a microcap retail investor is we could buy into these stocks before institutions can get in and drive the price up. And that's completely true. But one of the things that Ian talks about that I also like talking about when I can is that it's more than just before institutions. Typically, smaller investors can get in before medium-sized investors, who can get into a stock before the larger retail investors, who then it transitions into the smaller institutions and then the larger institutions. It's just not retail versus institutions. There's levels of retail money from people who are only investing a couple $100 a month all the way up to couple $100,000 a month, right? So it's not just retail versus institutions. There's different levels of money. And one of the things that gets noticed by some of the larger retail investors, the people that are going to put 50,000, 100,000, 200,000, 500,000 into a small microcap stock, is coverage, media coverage, research papers, information, because those types of people generally don't have time either, right? And so if they can get research papers to show them why they should be investing in a stock, or if they trust a researcher like an Atrium Research, then it really helps a lot of these smaller companies get noticed by some larger retail money. And that is fantastic. Any coverage is good coverage when you're a small retail investor. Here's their full list now that we're looking at moving forward. And I've researched quite a few of these, although most of these are in my Patreon, unfortunately. I've looked at Wajax Corporation, Quipt Home Medical. I have to point out this one. This is actually on my list for a video. So to read this chart, don't forget sales growth is last quarter. So this isn't year over year. This can be quite volatile. I've noticed a couple things. For instance, Kraken Robotics, 218%. Right? So that's not a year over year revenue growth. What did they get? 70%, something like that. That's a quarter to quarter revenue growth. Still, though, it's fantastic. It gives us an idea of what we're looking at. The EV over EBITDA is LTM, last 12 months, but the sales growth and the EBITDA margins are last quarters. The other thing, obviously, is Atrium Research can't go in and change their spreadsheet. This will age over time. This is just a snapshot, as you know. But if you look at Quipt Medical, share price is down 44%. Oh, you can't see that because I'm highlighting it. Share price is down on Quipt Medical 44%, sales growth of 60%, EBITDA margin growth of 24%, EV over EBITDA of 4.9. I need to go do my research, but obviously I look at those numbers and I'm pretty excited to go make a video on Quipt Home Medical. Their share price is down crazy. You know, Kraken Robotics I've covered. Kits Eye Care, that's more of a Wolf of Oakville pick. I've made a video on them before. Good company though, right? Tornado Global Hydrovacs I'm looking at. I've talked about Titanium Transportation Group before. And of course, I cover OneSoft Solutions. Basically, everything that I haven't looked at on this list from Atrium Research, I'm going to go back and research again, right? These are companies that Atrium is saying meet a lot of the criteria that I also have. Atrium Research has as well. And, you know, some of them I've never heard of. Dirt Environmental Solutions, High Vision Systems, Collabor Group, never heard of some of these. So basically, some of the research is already done for me. I can assume that these companies are probably going to be okay. They may or may not make my channel, but I mean, it's great to go get some free research, right? Now, this list is a different story. I've got arrows to everything that I've covered on my channel. Potential takeouts watch list. This is fascinating. BQE Water, Enterprise Group, Tantalus Systems Holdings, Gatekeeper Systems, Summatrix, Ready Shred, Quorum, TMG, Beware Holdings, BioRem, that's the small cap discoveries pick right now, I believe, Grey Wolf Animal Health, California Nanotechnologies. Now Vertical Group Inc. I'm actually trying to trade that one, sitting at a price of 20 cents today, Canadian, I think it is. NTG Clarity Networks, of course, a lot of videos on them recently. Reclaim and Air IQ. I've covered more of these stocks than I haven't. And I mean, this is why. This is why. Like, we're all looking for the same thing. We're looking for this, high revenue growth, improving profitable company, improving their EBITDA, and then still at a good valuation. Though some of these, right? BQE Water 24, Gatekeeper Systems 19, Beware Holdings at 30. There's still some of these stocks here in the single digits that I'll probably have to go look at, right? So again, anything here that I don't cover, I'm going to go ask why. Why have I never covered Nanalyst Scientific Core, SSC Security Services, and go take a look at those. And it really narrows down my list. Basically, between my channel and between this Atrium Research paper, there's a whole lot of investing ideas here, right? Disclosures from Atrium Research. I'll kind of end there, basically, because I should throw up their disclosures. Go read the research paper. I'll link to it down below in the pinned comment. Slow week this week in microcaps. I'm not going to talk about any specific microcap. Powell speaks, it says tomorrow. And then Wednesday is CPI in the U.S. And then Thursday is initial jobless claims report. So everybody's waiting around on inflation data. Obviously things are quite down today. So terrible day for me to take a picture of my top 10 list. This is my top 10 list right here. Today they're pretty much all down. Except for ADF Group, BQE Water, NTG Clarity's holding strong, OneSoft Solutions holding strong, but a lot of red here. Now, in all fairness, they've been going up. We've been in a bull market since about middle of December, right? A lot of these stocks are up significantly, and we're just getting some pullback. But yeah, Monday was because we're waiting for inflation data, right? Some stocks are down. Interestingly for me, go take a look at Summatrix. It keeps going down. It went up to, I think, 42, 43, 44 cents before earnings. I don't know why. This is a cyclical company. Their Q1 earnings always suck. Their Q2 earnings sometimes aren't much better. Their Q3 and their Q4 earnings are the earnings that basically blow people's minds and send the share price up. So for some reason, people were buying this stock up going into their Q1 earnings. Q1 earnings came in pretty weak, and now the share price keeps going down. And the more their share price goes down, the more interested I am in this company right now. So Summatrix is actually moving up my list even as the share price is going down. But that might happen for a few of these, right? Oh, people are always looking to dollar cost average down. We're getting a little bit of a quiet time here in microcaps. There's a lot of stocks that are going down right now. So there's a lot of stocks that are going up. Legend Power Systems, that's a video I talked about at the start. I introduced Legend Power Systems to shareholders. EZZ, this was my Australian stock that everybody hated. Nobody watched it. It's up like 100% at this point. I think I covered it at like 58 cents or something like that. People have made a fortune off this Australian stock. I need to move. I need to get out of Canadian stocks, apparently. I am Australia's greatest stock picker because my one and only Australian stock is absolutely crushing it. SCI Engineered Materials, I covered that at $5. It went up to, I think, $5.40, $5.50. It's back down to $5.28. Really like this company. There's a lot of other stocks that are going up, so it's not completely a Red Dead Redemption day, right? TMG, kudos to them. ADF Group, California Nanotechnologies. These are a lot of small cap discovery stocks, so I don't know if they're deploying a little bit of money right now, but a lot of those stocks are going up, and then, of course, BQE Water. That's it. Go take a look at Atrium Research. It's basically free research. And, got a few new stocks to look at. So I'm done for now. Let's see if there's questions, concerns, comments. How's everybody doing? If you just wanted to watch my video from my presentation, you're gone. You're free to go. If you want to stick around, I could stick around until I lose my voice. How can you be over the all-time high? It should be impossible. No, if they're willing to pay more than the stock was valued at their all-time high, that's how it's possible. So it is. That's what you want to see. Honestly, most of those buyouts are absolute garbage. That's why I'm kind of happy that some of them weren't on my channel. Right? Let's go take a look at those just for a second. How can you be over the all-time high? So, like, I'm not interested in a whole bunch of these stocks. I can't believe this one down, 98%. So here's the thing. This is like a penny stock pumping channel can do this. I wonder how many penny stock pumping channels out there. I actually think there was one for this HS GovTech Solutions that was pumping that one. And yeah, it got bought out, and the channel will be like, oh my gosh, we had a premium of 151%, and my people, my subscribers, whatever, made 151% returns on this amazing company. And it's actually, if you bought at the top, it's down 65%. But essentially, if a stock like this one, IBEX is the easiest one, whatever it got to, let's say it got to $1, they sold for $1.28. So it was 28% above their all-time highs. But I mean, one of the reasons we're seeing this where there's so many negatives is, of course, COVID. So all these stocks during 2021, 2021 were up significantly, and then they came crashing down, and that's when private equity mostly, was like, okay, it's time to buy some of these up before they go down, before they go up again, right? Hey Cameron, any news on Game On Entertainment? Also, what is going on with the share price? Opportunity to load up more, maybe? Do your research. Why do I have all that red ink on my screen? There we go. I don't know what's going on with Game On Entertainment. Not saying I took some time off, but look, I'm a fundamental investor. I look at earnings, I look at numbers. I don't get involved too much in hype. So if you're asking me what's going on with Game On Entertainment, they're doing stuff on social media. They're selling game tokens, I think. They're putting their platform out there for the world. That's absolutely fantastic. But I'm a financial guy. I look at numbers, and their earnings are delayed, right? Are their earnings out yet? When are their earnings supposed to go out? I don't even remember. I will cover Game On Entertainment again once they put out their earnings. And this is the second year in a row where they're delayed putting out their full year earnings. It's a little bit frustrating, right? And I think people agree with me. Their share price is down to, 9.5, 10 cents Canadian after being up to 20 cents. They lose a lot of momentum by not getting those earnings submitted on time. And that's not, look, I don't know what's going on with the company. I've got no idea. They could have a very valid reason, right? I'm not saying it's a bad company or anything, but from the point of view of microcap investors, we need the earnings. Those earnings got to get out. So as far as an opportunity to load up on more, again, who knows? We need earnings. Basically, Q1 should be coming out too soon, shouldn't it? Isn't it just full year, but Q1? Wild guesses, there's just too much in those watch list. Yeah, I think 29 stocks or so that they're covering right now. 30 stocks, might be a little bit more, but I mean, it's easier for me because I've got, just about half of them, just under half of them now, I've already researched. So yeah, have you looked into Infinity AI? The stock price seems to be on a downward trend because of massive sell-off from an institutional investor, but I thought it might be a good opportunity. I can go take a look. I'll say right now, it's a tough sell. That's a tough sell because it's got AI on the name, right? It's these companies are going to have to all change their name again in a couple years because a lot of people now, myself personally, and this is a personal bias, I'll go look at Infinity AI, but I know a lot of people that are looking at a stock like that right off the bat and saying, oh, it's just an AI hype stock, right? So there's going to be companies changing their name to take the AI out, in my opinion, just so they can be taken a little bit serious again. Once you get that AI in your name, you're lumped in with a whole lot of garbage stocks. So share price is going down. I'll add it to my research list. Only at a 5.1 million market cap, so real small. Oh, it's hard to research, but fun stuff. You never know. I don't like any of those. It's just me clearing debts till I see something I really, really like. Well, that's just it. Like at the end of the day, my channel is an introduction channel. There's a couple things to note here is that typically if you could find, what does Warren Buffett say? You find 2 or 3 incredible stocks and it can change your life forever, right? So I'm trying to introduce 1 new stock per week. Sometimes I introduce more than one. Lately, because earnings have kept me busy, I've been introducing less than 1 per week. At the end of the day, you're not going to invest in 52 new stocks per year. That's not what I'm thinking about by making these introductions. But everybody's got a different style of investing. Everybody has a different circle of competence. So I like introducing different companies because different people will, hopefully out of the 52 stocks that I introduce in a year, hopefully there's 1 or 2 that can you would be interested in. Now the fascinating thing is people get bored. That's why I'm a 1,600 subscribe channel and not a 61,000 subscriber channel. Like investing in stocks, you might sit here and watch 52 of my videos in a year and might only find 1 stock that you like. But the thing is, and if you've been following me for a while, if you find that stock that you like, if you find that Kraken Robotics, Gatekeeper Systems, if I help you do your research on it, some of these companies are making people 100%, 200%, 300% more, right? So that's what we're looking for is those 1 or 2 stocks that really kind of tweak your interest. Now, in saying that, I do find it interesting in that year after year, and I'll just quickly go back here to my own performance chart as I track it. And I mean, it's just the middle of May, so a lot more time to go here. But it's fascinating to me that year after year, what I'll see is that a somewhat diversified portfolio is always going to beat that more centralized portfolio. So what you'll see is that a lot of these stocks, that's great. You've got your top 5. You got a lot of really high conviction in that top 5. This was my choice for my top 5. I think I'm a pretty good experienced investor. And still, my more diversified portfolio is beating out my top 5, even with all my experience, even with all my research and conviction and everything else. It's finding those 1 or 2 stocks that can really change your portfolio. Now, the reason for that this year, we've got some companies like ADF Group wasn't in my top 5 at the time. Remember at the time they were at super high 52-week highs? I think when I first introduced ADF Group to my channel, they were sitting at $6. But I think when I made this video, they were closer to $8. And even at that time, I was like, well, they're going to go up. But, if they hit $10, $11, $12, they're a boring stock. I'm going to get a better company in my top 5. And instead, I picked a company like Well Health Technologies, which has done absolutely nothing this year instead of ADF Group. Now, ADF Group was in my top 10. It made it onto my portfolio list. It added to my average return bullish. And if I was investing in a larger, more diversified portfolio, I would have, you get these ADF groups that blow your portfolio apart, right? Reclaim. They were my numbers or my runner-up to Game On Entertainment. Now, Game On Entertainment went to 20 cents, right? So if I had traded that, I would have had 100% returns and not 0. But right now, Reclaim, when I covered it, was at 6 cents. And I don't know what's it at today, 13, 14 cents. When I recorded it here, it was at 15. So if Reclaim was added to this top 5 list, it was up 150%. Now, if it made my average return bullish, see these 1 or 2 stocks in a diversified portfolio can really drive your returns. And year over year, that's what I'm seeing, right? It's nice to be super concentrated. And if you don't have a lot of time, I do recommend that people are a little bit more concentrated. But also, if you've got the right people, if you've done the right research and you're picking the right stocks consistently, that the portfolio that's got a little bit more diversification to it seems to outperform every year. Let's see here. Get all that red off my screen again. What are we doing out here? Sheldon has another 16.5 million shares to sell of AIA. He's pretty toxic to any stock. Yeah, well, I'm assuming Sheldon is the CEO. That's generally not good. I find that insider selling is a little bit more drama and fear than it necessarily is in the financial world. Payfair. Insiders have been selling shares at Payfair as part of their stock options, as part of their salary. And a lot of people won't look at Payfair because insiders are selling, and it doesn't make sense to me. I mean, insider selling is one part of the equation. You have to really look at the big picture. But I mean, I'm assuming if this is like a 50 million share stock and somebody's got 16.5 million shares to sell, that's probably not good. Contracts with the city of Toronto, Montreal, and Seattle, and a lot more. I thought you might like it, but either way, it would still be entertaining if you didn't. It's always, like, I love researching stocks, so it's always entertaining. I've been following you for about 1.5 years, only stole 2 of your ideas so far. Super happy with how they turned out. That's exactly the point, right? That's exactly the point. Yeah, we're not all going to like the same stocks. As long as we look at other people, and it's interesting for me because in the financial space on YouTube and FinTwit, it's really tough because there's a lot of I don't know if animosity is the right word, a lot of like professional anger sometimes. Like if we can work together more as a group, we would all be better microcap investors. A lot of the best groups of microcap investors are pay to play, right? Small cap discoveries, microcap club, not if you actually send in a thesis that gets accepted by the group, yada, yada, yada. But you get my point, right? At the end of the day, you need to find good groups of people to go investing with. It really cuts down on your time. But that's why I like Atrium Research's paper, because I've looked at their part 1 paper. I've been looking at their research in the past, and we do have similar research kind of criteria. So it really cuts down on my time. And if I'm cutting down on your time, that's the main point of it. So fantastic. I think I'm done. That's it. I'm going to have videos out this week. I'm going to have a video I'm working on right now because I'm not mad, but I'm pretty professionally upset. That video is going to be revenue growth is not overrated. Revenue growth is not overrated. One of the things that I keep seeing in 2024 that's driving me nuts, I've talked about this many times, is how everybody wants a profitable growing company and they want this company to be growing their earnings, but they don't care about revenue growth. And it just doesn't make sense to me. And it's fascinating to see how investors, just go with the hype and social, the group think where people say something and everybody catches on, because I'm not sure how a company is going to continuously grow their earnings if they don't have revenue growth. I'm gonna have a video explaining that. I've also got a couple more videos coming up introducing a couple more stocks. I've given one away. At some point, I'm going to make a video on Quipt Home Medical. That's an interesting stock for me, but I've got some other ideas out there. Thank you for your time. I really appreciate it, and I'll see you again. I have a live stream every Monday evening, so I'll see you again in a week. As always, hit me up down in the Discord, Patreon, Twitter. I'm on a few different platforms out there. So appreciate your time. Have a great week trading.